What's going on, guys? So in this video, we're going to talk about how to pick the bottom in the stock market. Now, let me make this clear, disclaimer, I'm not a financial advisor, but no one is ever really going to pick the absolute bottom. We can get close, we can get in the zone, we can get somewhere near the bottom, but actually picking the bottom is not really going to happen unless you're just continuing to dollar cost average and buy every new lower low. But we have a good idea of where potentially stocks could go based off of technical analysis. Now, if you guys do not understand technical analysis, visit my website, visit my Discord, join, become a member. I'll teach you guys all about technical analysis. That's what I do for a full-time living. With that being said, we're taking a look at the S&P 500. We're going to start off looking at the overall total stock market, the biggest 500 companies in the United States. Currently, all-time highs, 479. Obviously, we know where we're at now, $382. So just about almost 100 points down from then. This year has been absolutely devastating, annoying, frustrating, sad, whatever, right? With that being said, we have to look at the technicals here. Ever since we lost the 50-day moving average, multiple attempts to try to get back over, and then we get a next flush, and then multiple attempts to get back over the recent supply zone, and then we come back down. So what I'm looking at here, nothing more than a rally that we had last week, just a rally. Realistically, we can't start even calling the bottom until we get back over the 50-day moving average, which is sitting at $438. But if you see this line down here, if you look at this zone, we have not came in this zone yet and tested. For me, what I would like to do, or what you can do if you're an investor and looking to try to time the bottom, is let it get to some bottom supports. One level that we need to look at, the 200-day moving average. If you don't have that on your charts, put it up there. My 200-day moving average is yellow. I like to make it yellow. It's very easy for me to kind of identify that. That's the granddaddy master of them all. If the S&P gets down to the 200-day moving average, I will be a buyer. I will be a buyer long. Now, that does not mean that I have not already been dollar cost averaging in when we do reach some demand zones. But for me, if we're looking to try to do our best to time the bottom, which again, disclaimer, is not like you're never going to actually time the bottom, but $350 on the SPY, that would be a good time to start buying. Let's look at the triple Qs, which is predominantly tech stocks, the NASDAQ 100. We are looking for a price of 264, 200-day moving average. Now, could we dip below and then reclaim it? Yes. Could we go a little bit lower than 264? Yes. But somewhere in 264, I want to be a buyer. Let's look at Amazon. Amazon, well below its 200-day moving average here. All-time lows are not all-time lows, but these recent lows here, 101.19. Okay, so here when we're kind of looking at it, where is the bottom? Because we're already below that 200-day moving average. We would need to hold this zone and get back over the 200-day moving average. Then we can take our opportunity to try to go long. Obviously, if we lose the 200, we have to exit that trade or that hold or that swing trade or whatever. Let's wait for it to get back over 127. If you do just want a dollar cost average, you got a 10, 20-year outlook on Amazon, then definitely if we do make a new low below 101, you're going to want to add more there. And actually, what I want to actually do here, what I want to do is add the monthly time frame. This is going to give us a little bit better look here. I'm going to go 20 years back on my data, and I'm going to use the 1 month, which means that every candlestick you see on my screen is going to be a 1 month candle. Okay, so if I do that, and now I take a look at the 20-year 1 month chart, now we can see some levels of support. So if we kind of look here, big run up, a lot of consolidation, pretty much over a year. Did we have some highs, some lows? Yes, but we pretty much went sideways until we broke down. So what I would be looking for on Amazon, anything in the 90s, $93 is a great spot. That is going to be your monthly 100. Anything below $90, $80. These two zones are absolute must adds on that. Let's look at Facebook, or AKA Meta. Meta is down below all levels of macro supply. If we are looking for a new low on Meta to try to time the bottom, again, you're not going to time it perfectly, but let's look for a price somewhere between 130 and 140. Let's take a look at Tesla. Very quickly taking a look at Tesla. Let me take these lines off here so we can kind of see this a little bit better. Tesla, again, below its 5-10-day moving average on the monthly time frame. I can see Tesla getting down into 485, 500. I know it seems crazy, but if the market continues to roll, 485, 500, fantastic loading zone. Again, if things got really crazy, let's look at 400 on Tesla. I mean, if you're trying to time the bottom, you gotta go deep. If you're not just trying to buy every little small dip down, you want to go deep, and you want this thing to get into those hard macro levels of support. Let's take a look at AMD. AMD, I'll be a buyer, serious buyer at 72 or 63. I think those are fantastic loading zones. That's the monthly 50-day moving average. And now that I have the monthly time frame pulled up, let's take a look at the SPY, because we were looking at the weekly. Let's take a look at the SPY. We would be looking at 358 and 343. Okay, those would be ultimate landing zones here on the S&P 500, between 345 and let's call it 355. Fantastic zone to load. I think from there we can go sideways and then start to make a recovery. So if you would like to time that bottom there, something like Upstart, absolutely obliterated. Let's look for like something in the low 20s, between $20 and $30 on Upstart. I think if this does recover, which it should, it's not a bad company, but again, people thought in the .com bubble that some of those companies were not bad either. A lot of things can happen. With that being said, let's take a look at Netflix. Netflix is down to some macro levels of supply. I actually like Netflix here, 181. If we do lose the price of 160, let's look for 138, 140s. Okay, something in the 140s I believe would be a fantastic opportunity to start loading. And let's take a look at one of Cathie Wood stocks, Zoom. This stock, 588 all-time highs, below all levels of macro supply or demand. Let's look for a price. Wow, I don't really like that. I don't like the $40 price. $40 price would take us way down, but let's just be completely honest. $40 would be obviously the ultimate sweet spot. Again, we're trading at $100 here. I'd like to see it get back over this level of supply. I'd like to see it get back over this 200 here, the 200 EMA. That price would be 123. Over 123, if we can hold that and get back into the channel of 150, I like Zoom. Again, if this market wants to do something absolutely crazy and we do lose the $75 last bit of price action here, then let's look for something in the 40s and 50s on Zoom. Hope that kind of makes sense. That's how you kind of time the bottom. Just to kind of clarify things, we are looking for the 200-day moving average on the weekly time frame. That's a good entry, or a 200-day moving average on the monthly time frame. Again, these are longer term holds. These are swings. These are trying to time the bottom type of plays. You want to let them get deep, and when I mean get deep, you want them to get into those weekly and monthly supports. Hope this video helps, guys. Subscribe to the channel. Make sure to leave me a comment down below that you guys subscribed, so I can go ahead and reach out to you guys and thank you guys personally. But with that being said, I'll see you guys on the next one.